In this video, I want to talk about 3 stocks to buy in April 2025. The market is dropping and you can have some opportunities in this market. So I have for you 3 companies. Spoiler, it's Amazon, it's Intercontinental Exchange, and it's Gravity. So if that's interesting to you, you can continue the video. In case this is your first video from this channel, welcome. My name is Christophe Nour. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. And full disclosure, I own Amazon, I own Gravity, and I plan to buy more in the future. I think they are really good businesses. Okay, let's start with the first one. As tariffs impact the market, as the Magnificent 7 is dropping, Amazon is dropping. It's down 20% from all-time highs, and in a couple of weeks, the stock has collapsed, and it has collapsed to a very good valuation in my opinion. So you know Amazon. I don't have to do a description of the business. And what is really interesting about Amazon is that the margins are increasing over time. You have a couple of segments of this business. So I can go to FinChat. This is a website that I love. And you can go through the different segments of this business. So you know they have an online store segment, and you know that the growth has slowed down a little bit. But maybe what you don't know is that Amazon has different other segments, AWS, advertising, and they are growing more profitably than ever. If you look at the advertising part of Amazon, growing double digits, the growth is not stopping. And if you look at AWS, similarly, the growth is not stopping. You have a chart that is literally up and to the right. So I can even show you the percentage of growth. For online stores, they grow roughly 5% per year. Look at this line, this is 5%, so not a lot of growth here. For AWS, they are growing 20% per year. Advertising, this is here 20% per year. My strong guess is the 2 asset-light segments like advertising and AWS will represent a bigger part of the revenue in the future. And these are segments that are very profitable. So in the next few years, the next 3 years, 4 years, 5 years, the majority of the revenue from Amazon, in my opinion, will be much more profitable. So the AWS part and advertising part will bring the margins up. And if I go through the, what can I show you? If I go through the margins of AWS, I can show you the EBIT margin. It can be interesting. That's the EBIT margins of the business of AWS. Before, it was a capital intensive business and the margins were only 2%. And then as AWS is growing 20% per year, as the advertising segment is growing double digits per year, the margins are going up. And my strong guess is over the next 5 years, the operating margins of Amazon will be much more than 10%. You can have an EBIT margin of 20%. And if you think profitability will double, you can be very bullish about the stock. So that's the thesis around Amazon, led by Andy Jassy. Jeff Bezos is back to the business. So you have a operational team that is in the top 10 of the world. You have an efficiency mode in this business. They will be everywhere. And I wouldn't be surprised if Amazon is the first business to reach a market capitalization of $5 trillion. That would be my go-to place. That would be my first bet. If I had to guess, what will be the stock reaching $5 trillion in market cap? And now the stock has declined, right? You have a forward PE ratio of 30. Just for comparison, the PE ratio of the S&P 500 is 28. So you pay a small premium for a business that is far superior to the average business in the US. Look at the revenue, literally up and to the right. Net income is poised to continue to go up in the future because of what I just said. Margins going to be much higher in the future. They will reinvest into this big flywheel, but the free cash flow they generate will be much higher in the future. They don't have a debt problem. They have a lot of efficiency, and they will implement AI into all their operations. So in the next 5 years, you can check the interview from Jeff Bezos. He mentioned this point. In the next 5 years, you can expect the business to be much more efficient thanks to AI implementations all across the segments. So yeah, this is a thesis about Amazon. Pretty simple investment thesis actually. The business is big enough, but the stock has dropped. And maybe the stock will continue to drop this month to a PE ratio of 28, 27. That's fine. The business will continue to grow. What can disrupt Amazon? In terms of revenue, they have beaten Walmart from the latest data I see. So they have a revenue of $600 billion. That is unbelievable, going up and to the right. Yeah, more than $600 billion without any debt problem. And they have a lot of free cash flow generation efficiency. Look at the ROIC here, return on invested capital at 15% now. It was not the case a couple of years ago. The business has become much more efficient.
By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video.
Now, the second company I want to talk about is Intercontinental Exchange. Okay, let me read the description for you. Intercontinental Exchange is a vertically integrated operator of financial exchanges and provides ancillary data products. Though the company is probably best known for its ownership of the New York Stock Exchange, which it acquired in 2013, ICE operates a large derivatives exchange too. The company's largest commodity futures product is the ICE Brent Crude future contract. In addition to the exchange's business, which is about 50% of the net revenue, Intercontinental Exchange has used a series of acquisitions to create its mortgage technology business, 20% of revenue, and fixed income data services segment, 25% of revenue. So you have a pretty simple business model that will not be impacted by tariffs, that will not be impacted by geopolitical turmoil. Look at this. For the first Trump mandate between 2016 here and 2020 here, not much volatility. And generally, stock exchanges like the volatility. They make a lot of money when you have much more volatility in this market. And now, with Trump as a president, if you want to bet that volatility will continue, which I also believe, maybe stock exchanges are the way to go. You can also say the same thing for brokers, right? You make money on commissions. So this is a pretty asset-light business model. Look at this. Gross margins at 50%, net margins at 25%. Pretty reasonable. This is not a growth beast, but this is still a grower. The revenue, look at the revenue in blue here, up and to the right. Net income here, up and to the right. Not a lot of growth for net income, but you get my point. This is a stable, slightly growing business over time. They have increased their debt level because of acquisitions, and look at the free cash flow generation they have. Look at this, up and to the right. You don't have exponential growth. I agree with you. This is not extraordinary, but with this new administration, you have a lot more uncertainty, and I would say having Intercontinental Exchange in your portfolio gives you more stability. By the way, if you look at the year-to-date performance, it's in the green. It's positive. So I think they will do very well. You will have a fine performance for the next 4 years. And what's the PE ratio right now? You have a forward PE ratio of 25. Yeah, pretty reasonable. I would say this is a good business with the current environment at a pretty reasonable price. So definitely a stock to add to your portfolio if you plan to have more stability in your portfolio. Okay, and the next stock for you is Gravity. This is a small company. By the way, the market cap of Intercontinental Exchange is $100 billion. So this is not a small cap. Now Gravity is a small cap. It's a small company in Korea that creates mobile games in different countries, mostly in Asia. It's an online and mobile games developer and publisher based in Korea. So this is a company that creates games, is profitable, obviously, and they have decent margins, mobile games, available at a PE ratio of 7. If you look at the revenue for the company, it's going very well. You don't have extraordinary growth, but it's pretty decent. They have stable operations since COVID. Same thing with net income, stable operations. What is really interesting is they generate a lot of free cash flow here. By the way, if you want to understand the company made losses before 2017 because before they weren't about mobile games. It was a PC game and PC games, and it was unprofitable at the time. But in 2017, they shifted their operations to mobile games, and it was much more profitable. So that's why you begin to see profitability since 2017. And since 2017, they just accumulated cash. Look at this. They have a cash level at roughly $400 million. And the market cap is roughly $400 million. So you can buy the company at cash. Keep in mind, this is a company in Korea, so capital allocation is not the same at all that in the US. They don't do buybacks, they don't do dividends, but I own Gravity for this exact reason I just pitched to you. I think it's a pretty good business, not extraordinary, but pretty good business, profitable business. You have decent growth or stable earnings, but all the cash flows are going to the balance sheet, and you kind of have a margin of error because the company is selling almost at cash. The company recently rebounded, so before, I mean, it gained 10% in 1 month, but before they were trading at cash or below cash. So I bought at around $60 for full disclosure. And I think you have a good margin of safety for this business. Again, I would say even though it's a Korean stock, it will add more stability to your portfolio. It will not be massively impacted by the tariffs, macro, geopolitical tensions. They just make online mobile games across Asia, and they make money, and this is profitable. And if you look at the EV to free cash flow, this is 0.43. So very, very cheap for a pretty decent company. So I wouldn't be surprised if you can make 10 or 20% per year with this company, because if it's extremely cheap. So I bought it recently, and I think I will continue to buy it if it drops significantly. But right now, I think it's still cheap. So here we go, guys. You have 3 companies to buy in this market turmoil. Good luck to you. Maybe you will be interested in continuing the due diligence. Amazon, Intercontinental Exchange for more stability. It's a defensive play. Same thing with Gravity. A little bit more niche, but definitely a defensive play that has nothing to do with the US tech, with the Nasdaq. So yeah, that's it for this video, guys. I wish you a nice rest of your day.
If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio. Additionally, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you are blocked, if you have any questions, I'm here to help. Click the first link in the description to get more information. You will get a video that explains how everything works completely for free. No need to sign up, no need for your email address. Just click the first link in the description and I'll see you on the other side.